Hey gang, Carl White here, broadcasting actually in my kitchen today, because I can, right? Because I can. So I'm in the kitchen today, broadcasting here at the secret headquarters of the Mortgage Marketing Animals, and you're listening to Loan Officer Freedom, number one podcast in the world today for loan officers, because you knew there would come a day where Jason Scott himself would be on here, and
Uh,
you've been waiting for the last 6 years that we've been doing this for this episode. Today has arrived. So I haven't quite figured out, Jason, the title of this one. I'm thinking something like, how he does 15 to 20 appointments a week,
well, I think
and and you're going to map that out for us. Do I have that right? First of all, first of all, brother, great to see you here, my friend.
thanks for having me, Carl. I think we should call this Conquering the Great White North.
Conquering the Great White North. I like that. I like that. I do. I like that. So so bring us up to speed, man. So
Yeah,
where
the
are
quick 411
you?
one.
Yeah, where are
Sure.
you? Banker, broker, you've been
Yep.
doing this for a week, a month, a decade,
Yep.
or 10 decades. Just give us a little background.
Sure. Sure. So I've been a mortgage broker for 17 years. The Canadian version is, I guess, the equivalent is loan officer in the US. So I'm a one-man show. I have my license with TMG, the mortgage group, which is a national brokerage, and there's something like 1,500 brokers.
Nice.
Uh, in my previous life, I was a newspaper photographer and reporter. So fun fact, mortgages and journalism kind of tie into each other in that, you have to build rapport and dig into people's, information and then figure things out.
Isn't that interesting?
Yeah.
Well,
Um,
if we have time, I'd love to hear how that all happened. I want to get into the
sure.
how you're setting up all these appointments and all these closings, because
Yeah.
it's my understanding. I was talking with Coach Dan, and so you're meeting with a member of the Freedom Club,
Yeah.
and in January, I've got here that you closed seven, and,
Yeah.
and
January, February are sort of my worst months of the year. In March, we'll close 20 deals.
yeah, because I got January was seven, February was 15,
Yeah.
and March around 20. And I get
Yeah.
that just makes sense because again, you're up, it's cold where you are. I
Yeah.
mean, it's as
Exactly.
we're recording this is in March,
Yeah.
and so it's wintertime up there. And
Yeah.
my guess is not as many people buy houses when it's 10 degrees and 5 feet of snow.
Yeah, in either Celsius or Fahrenheit.
That's
Um,
right. That's right.
no, so we're snow free. Basically, March 1st is the kickoff for the spring market. I'm in Edmonton, Alberta. So Edmonton is the capital of Alberta, which is kind of like the Texas of Canada. Anyways, I'm a solo agent. I have two assistants, and we just hammer through as many deals as possible. Our market happens to be incredibly busy this year. Last year was a little slower. Revenue was down because of people taking 3-year terms. So in Canada, we have much shorter terms. Typically, it's 1 through 5 years. Most people take 5 years. The shorter the term, the less we get paid on compensation. And last year, just where the rate curve was, 3 years made the most sense for people. So, this year, 5 years, I think, is making sense. And so revenue's up, business is good. If anything, we've got a shortage of inventory. Um, the 350 to $500,000 price point is the sweet spot for houses in Edmonton. My average mortgage is $300,000. It has been for years. So,
Yeah, that's about where I think mine last month I think was 289,
okay.
somewhere
Yeah.
somewhere in that range. So that's about the same. That's always kind of been my sweet spot too.
Yeah.
I don't know. I always feel, I don't know, for whatever reason, I always felt more comfortable talking to normal, in my case, normal America,
Yeah.
for whatever reason. Even you and I both done, very well,
Yeah.
are on the upper end of things. But I don't know. I just always felt I don't know, for whatever reason. Hey, but let's get into this. 7 January, 15 February, 20 something in March.
Okay, so you're talking appointments or deals? Deals,
I'm
right?
talking about those were deals.
Yes, yeah, yeah,
So those were closings.
yeah,
But we all know no closing comes without an appointment of some way, either in
correct.
person, Zoom, phone. So you're averaging, I'm seeing here, or at least the information I have, you're averaging around 15 appointments set per week. Is that
Yeah,
accurate?
yeah, yeah. And that's actually just my past clients. So I signed up for the concierge program probably last May. Did absolutely nothing with it for months. Took me months just to get my database exported and off to Chris for his crew to deal with. So really, we launched that in, say, November.
All right.
And
So November you started, and just to bring everybody up to speed, what exactly is the concierge program that's working out so well for you?
so it's your, I guess, AI database. And so I've got a database of about 1,600 people in there.
Which
And
which are like past leads, past
just past
borrowers.
clients. Nope, just past clients.
Okay, so you have a past database 1,600.
1,600.
Okay.
And so what happens is the program reaches out to people by email and text, and there's a concierge agent who does calls, power dialing, and her job is to set up annual reviews. And so, I've been doing 18, 20, give or take, appointments, and these are all phone calls. Like this week, there's 21 of them, right?
All right. So wait, so you got, let's call it a caller,
Yeah,
and this caller, does he or she, I think you said she, does
she.
she only call, or does she text and email also using the AI program?
So,
Or is it
okay,
strictly just calls?
no, I don't know exactly how the program works. I'm assuming there's different triggers, and at a certain point, she's actually calling. She does
Uh,
get people on the phone.
okay,
Okay.
so you have a what we would call a caller,
Yep.
and the caller is calling your past database,
Yep.
setting up appointments, and in your case, appointment is a phone appointment. Is that correct?
Correct. Yeah.
And the hook that the caller is using is, I'm calling for your annual mortgage review.
Correct.
All right. And doing that, in your case, she is setting up 15, 20 appointments per
Yep.
week. How many
Yep.
show up?
Like 95% of them.
So almost all of them. All right.
Yeah.
So
And
so she so she's calling up and setting these annual mortgage review. Any idea what script she's using? Like, is it just Jason wants to do your annual mortgage review, or that kind of thing, or
yeah, I
some?
don't know the exact wording, but that's the gist of it. Now, some people get confused and they think it's about their mortgage being up for renewal, which then they reach out and go, "Hey, how come, we're not up for renewal for another 3 years or whatever?" And I just say,
Yeah,
well, really, it's just about touching base and, you know, seeing, can you increase your payments or make a lump sum payment? The goal here is to get you out of debt sooner rather than later. Most people seem to be very open to it. The occasional person is put off by it, but you know,
whatever.
such as
Yeah,
like can't be all things to all people, right?
yeah.
And
Well, you
so
know
the
what? Stop there for just a second.
yeah,
I'm going to tell you. So what you said was, most people say yes,
yeah,
and some people say, "Hey, go pound sand. Don't, you're bothering me. Go away."
correct,
Let me tell you what most people do, Jason. What most people do, I would say 90%, they stop the entire process. They stop helping everybody else in their past database because 1 or 2% said, "You're bothering me. I don't want to be a pest. I'm tapping out. I'm out." That's
yeah,
what most people do.
correct.
What would you say to that? And again, we're not making fun of those people, because they got that thing in their head says, "Hey,
Right.
I need to stop this because this is not going good." What would you say to those people?
Well, if you're using the concierge, you won't even get your feelings hurt because all you see is an email or a text that says,
Somebody else is making the call for you. I
yeah,
got
and someone else makes a call. I mean, the reality is, Carl, like this is the whole program is designed to put a fence around my little flock of mortgage customers. Some will escape, right? But I can guarantee that if it wasn't for the program, I would make exactly 0 phone calls out, except for when people were coming up for renewal. And even then, I was getting too busy to be proactive on renewal phone calls.
Yeah.
So the amount of money left on the table is absolutely horrendous, right?
Yeah.
Um, so
Yeah, I think it really comes down to we've got this little formula that we talk about: offers minus no's equals money. And that
yeah,
if you make more offers, you're going to make more money, but you're also going to get more no's. And so
oh
you
yeah,
closing, 22 loan or 20-ish loans this month, my suspicion is you got a lot more no's than the person that closed 1 or 2 loans this month.
guaranteed,
Yeah,
guaranteed.
guaranteed. That's exactly right. All right. So you've got
Well,
this person, they're making phone calls,
yeah,
they're setting appointments for you, and um it's a phone appointment. How long are these appointments in time?
they're scheduled for 20 minutes. They take anywhere between 5 minutes and typically 10, 15 at the most. One guy kept me on for an hour. That was a one-off. Most people, it's like, hey, how's it going? How are you doing on debts? The name of the game, the way I do it as a value proposition is, look, what's your cash flow like? If you've got consumer debt, we're going to do the Dave Ramsey snowball, repayment program, list your debts from smallest to largest, go after them. And then after that, we want you to increase your payments, because the problem that is looming in Canada is so many people during COVID got mortgage rates of, 2%, 1.8%, 2.2%. And today, a typical 5-year rate would be, let's say, 4.9. And so they're going to have payment shock if we don't do something proactive, by either making a lump sum payment or ideally just even increasing your payments just to reduce the gap, right? So
Yeah.
it's an easier step up. And then from, my non-altruistic side of things, the whole point of the call is to say, hey, who do you know who needs help? Right.
Yeah. Yeah. So so of your say 20-ish closings that you're having here in March, how many of those are past database or referred by past database versus new business?
I don't have that number off the top of my
But
head.
what would you more or less what would you think?
10%, 10 to 15%.
So
Yeah, I would say that
so
it's
10 to
from
15
the best.
percent 10 to 15% what?
Why that number?
No, what? 10 I don't know what you're 10 to 15% of what?
10% of the deals that are funding this month would be from the database program.
Got it.
Now, if you looked at my overall, number of deals, probably 50% are referrals, right? 30% would be like past database stuff where we may have had something in the works before the program was going. And then 15% is you know, referrals from realtors. And then whatever's remaining over is from SEO stuff and just people cold calling me.
All right. So more or less 50% referred,
Yeah.
and that's from agents primarily.
Yeah, agents and past clients. Yeah.
Okay, okay.
Now
So
I'll give you
so and that's what I want to get to. So what percent of your closings are responsible from marketing to your past database? So you're either doing their loan or somebody they referred you.
I would say 30 to 40%.
Okay, yeah, that
Yeah.
that sounds about right. And then the other 60 to 70% is either SEO stuff that you're doing
Yeah.
or referrals from real estate agents,
Yeah.
financial planners,
You got it.
attorneys.
You got it.
I got it. I got it.
Right. But now that I've got this program going with contacting the database proactively, and I've always contacted my database by emails and stuff. I consider this like, 10 levels higher, right? In terms
Yeah.
of you're actually having a conversation. There's true value there.
Yeah.
Um, and so, there's not enough of a track record yet. Really, we're only 3 months, 4 months into it. But I
Right.
can
Right.
tell you, I submitted a file for a renewal today where people were coming up for renewal in July. The database activator had reached out to them. We had the phone call. They were thinking about going to their bank, which was a different lender, just to get a secured line of credit. And, I submitted to a different lender to not roll in a car loan into that mortgage. It doesn't make sense, right?
Yeah.
So, anyways, that's an example where I may have had the business, I may have lost the business because of just not being proactive and calling soon enough.
Yeah.
At the end of the day, I got the business, right?
Yeah.
So,
Good
it's
for you.
like anything else. You need a multi-prong approach to things, right?
Hmm.
And again, whatever you can do to fill as many holes in your bucket as possible,
Yeah.
you, right?
Yeah. We call it the octopus method, where
Yeah,
you have 8 arms, and this arm is emailing the real estate agents. This arm is calling the real estate agents. This arm is emailing the past database. This arm is calling the past database, and
yeah,
so forth and so on. So
yeah. It's
good
kind
for
of
you,
like an
man.
octopus bear hug, right?
Yeah, yeah, that an octopus bear hug. I like that, man. All right, so you've got this caller calling. Um, she's setting you up 15 to 20 appointments per week.
Yep,
They're they're they tend to be 10 to 15 minute quick
yep,
phone calls.
yep.
Um, how are you getting business from it? Like when you're talking to them, are you those that you're getting business from? Are you refinancing them? Are you like cash out debt consolidation, or is it
No.
referrals of their friends, family, and coworkers?
So by and large, because of where we are in sort of the life cycle of my database, most of those people, let's say, well, let's put it this way. In Canada, most mortgages renew every 5 years. Okay. So your life cycle is so much quicker than in the US, right? If you're buying a place here and you're a first-time buyer and putting 5% down, it's going to take you a while to build enough equity where you can actually do a refinance,
Yeah,
right? So most people were moving them either to a new lender to get a better rate, or if it makes sense, we're renewing with lenders where I get paid on like basically a renewal compensation or deferred compensation. I'm getting old and lazy and, want to have some deferred comp and not have to be fighting lenders on every um, file, right? So for most of those people, it's the opportunity to say, hey, listen, who do you know who needs help? Let's get you ready for your renewal. I primarily work with first-time home buyers, so probably about 50% of my business, right? So I'm providing as much mortgage advice as, sort of life advice in terms of here's how you handle this debt and get out of it, right?
yeah. All right. So you've got somebody calling. They're setting up your appointments. They're calling your past database. You're doing the annual mortgage review as a hook.
Yeah.
How often how often do you like how are you doing it? Are they just calling your database all the time, or are they picking a couple
No.
letters per week, or like how often do they once every
So
6 months? Like what does it look like?
yeah, so the way the program works is it's 200 uh, calls or clients per month that they reach out to. And so, excuse me, if I'm getting, let's say, 20-ish um, appointments per week, so that's 80 out of the 200. That's 40% is pretty darn good for a
Wow.
response rate. So, it'll take 8 months to get through my database once, right?
Yes.
So you can argue that that's not enough. You can take the flip argument and say, oh, that's plenty or too much. It's funny, my significant other also as one of my assistants. And she was very, very opposed to this program to start with. She's like, people are going to hate this. It's intrusive. They know it's AI. They know it's not you. And by and large, people are very grateful when I reach out. So
Hmm. Yeah.
waiting
Yeah.
for
I
the
think
sales
it,
guys, eh?
yeah, I think it's, I think it's, yeah, I call him little guy, or in your significance voice, the little gal that sitting on our shoulder and is barking little nasty things in our ears. And I think that happens with all of us. And I think it's just a learned skill to ignore that rascal,
Yeah,
knowing that 98% of the time it's absolute garbage.
yeah,
And yeah, and just push through it, perseverance. I mean, gosh, dude, your numbers speak for themselves. I mean, it's pretty impressive. Um, what now is this person only doing your past database, or are they calling and setting realtor appointments also?
no. Um, no, I want them to focus on the past database because
Okay.
again, I only get like 200 hits per month, right? So
Yeah, yeah.
yeah, now I did run through a list of pre-approvals that went nowhere from
Yes.
2023.
Yes.
So we did that in January. Deal last week closed from that, right? So, and
Wait, say
then
it again.
so we did that in January to
Yes.
target the 2023 purchase leads that went nowhere.
Yes.
One purchase closed on whatever the 7th was, so 10 days ago, give or take.
Okay.
And last week I submitted an application for her brother who is buying a house. It's a new build, so it'll close in, let's say, October, right?
Yeah.
So
So another
two
two just
deals
calling
from,
dead leads.
yeah, yeah. And
Yeah.
that's just the one I can think of off the top of my
But
head.
you know what I think what this goes down to. I mean, you know what I'm getting a picture of here, Jason, is, man, I think we might end up calling this an example of octopus marketing success. Because you know what I'm hearing is, Carl, I'm getting referrals from real estate agents. Carl, I'm getting my past database. Carl, I'm getting referrals from my past database. Carl, I'm calling old, and I'm using air quotes here, old dead leads. And I'm getting 2 loans from this. I'm getting 4 loans from this, and I'm getting 3 loans from this, and I'm getting 6 loans from this. And when you add up the twos, the threes, the fours, and the sixes, you come up with 20.
Yeah,
And what most people do, Jason, is they've got that one-legged octopus,
yeah,
which is why they're at 2. And you're going, well, I only got 2 doing that also. I just did other things in addition to that. I'm not a
right.
one-legged race here. I've got 8 legs, all reaching out and doing other things. And in your case, outsourcing it. So
Yeah,
somebody else is making the phone calls for you.
yeah,
Man,
yeah.
really good stuff. There's no one thing. It seemed to be like a combination, like all this stuff is adding up
Yeah.
to impressive numbers.
So I'm not a particularly smart dude, but what I do know is you need to outsource as much as possible, right?
Yeah.
There is not enough hours in the day to do, you know, what needs to be done, plus add or keep the pipeline full, right? So,
Yeah.
and this is a numbers game, right? So the bigger the number at the top of the funnel, the bigger the number at the bottom of the funnel, right? And my goal is to um, eliminate as many leads as quickly as possible, right? So
What's that old saying? I want a yes or a no. There's no money in the maybes. And
correct. Yeah,
so that's what you're doing.
yeah.
Um, so with having a call or calling your past database, are any challenges to that? Like, are there, like, hey, like, people that are listening to this, is there anything that we need to tell them? Hey, it's a great thing to do, but boy, one thing you want to watch out for is there anything, like, any downside to it?
There is. I mean, the irony is if you have 6 or 7 or 8 10-minute phone calls per day, it starts eating into, underwriting time and processing time, right? So I do a final underwrite of files. One of my assistants, her role is primarily doc chasing, doc review, and getting a file ready for me to look at. My other assistant is sort of deal flow watching, making sure things are moving along. She's reaching out to people to prompt them to get us our paperwork that we need. And she follows up with the shoppers saying, hey, how's the shopping going, etc. So my job really is answer the damn phone when it rings, right? So I get a lot of stuff off of SEO. And so my goal is to convert them to an application right then and there if I can, or decline them right then and there if I
Yeah.
can, right? And then I call realtors on Monday. I call my clients on Tuesday. Um, Wednesday, Thursday is a lot of cleanup messes, right? And then I troubleshoot with lenders, right? And then I do a phone call review with the clients on their approval letter and say, okay, here's what we've got. Here's what everything means. Do you have questions? Right. And that's building rapport. My whole business is aimed at setting me up as the authority on their mortgage. Right. I mean, let's face it, I'll close more mortgages in a week than most people will have in their lifetime. Right. So um, I take an educational approach to things, especially first-time homebuyers. Like there are no dumb questions.
Yeah.
Um, and then I just try to, do the best job we possibly can so we get a 5-star review.
Yeah. Good stuff, man. What's what's something you wish you'd have known when you started this that you know now?
Like 17 years ago or what?
Well, I was thinking, yeah, let's go back. Yeah, absolutely. What's something you know today that boy, I wish I'd have known this when I started.
Um, I think being proactive on your database is everything, right? That's where the money is in terms of when you want to get out of this business and either sell your book
Hmm.
or, I have two teenage boys. Believe it or not, the 16-year-old one said the other day that he was interested in, maybe becoming my successor at some point. I was like, well, that's great, but I want you to go do other stuff for 5 or 10 years before we worry about that, right? So, but the money's in the database, right? And had I been better at my database in the early years,
Hmm.
you know, I too might have a secret location.
Well, it sounds like you can afford a secret location. You know,
No, not yet.
I think you're really onto something there, though, because if you look at it, if you look at like two of the biggest companies on earth, Amazon. What is Amazon? It's a database company. They
Right,
happen to sell stuff, but it's a database company. Help most of the stuff they sell isn't theirs. It's other people selling it through Amazon because Amazon has the database. Apple. Look at Apple. Apple's not a computer company. Apple's a database company. The reason why they make more money in the music industry than anybody else today is because they have iTunes, which is nothing more than it's not a music company, it's a database company that plays music.
right,
And so yeah, I learned early in the game. I'm not in the mortgage business. I'm in the marketing to my database business. I just happen to
right.
be marketing mortgages,
Yeah,
So,
well, that's like Dan Kennedy, right? You're in the business of marketing whatever your business is, but
love
you've
that.
refined it to the database component,
Yeah, I like that.
which he would have called a client list. So same difference.
Yes, that's exactly right. Same thing. Yeah, I'm a huge fan of Dan Kennedy. I miss him. I haven't seen him in he hadn't been active in probably 10 years, but just a great, great, great guy. And for those that are not familiar, he's not in the mortgage industry. He was more of like a business coach, I guess.
Yeah,
And
yeah.
really,
Direct
really
sales marketing and stuff.
direct sales marketing is what he's really known for, is as writing ad copy for letters and postcards and whatnot. But brilliant man. So man, I think we kind of covered it. Um, so your caller is calling your database. It takes about 8 months to run through it, and then you start again, setting up 15, 20 appointments per week,
Yep,
20 minutes long. The hook is annual mortgage review. On that call, yeah, some of the loans you get are theirs. It sounds like an almost equal amount is the referrals that they give you of friends, family, and coworkers per se.
yep,
And and in your case, well, what you're saying is if you didn't have the caller, there'd be zero chance you'd be making those calls.
Yeah,
That,
that's
that, that,
just,
that- yeah, I get it. No, there's no judgment there. It's just that
yeah,
you'd outsource it. That's like,
yeah,
brother, if I didn't have somebody working on my air conditioner, there is zero chance I'd have air conditioning, right? So it's the same thing. Outsource out what be okay with. Look, my help does what I could do if I could count on me,
yeah,
right?
exactly.
Yeah, we are our team, and having I was talking to somebody this probably about a year ago, and I told them they asked me how many units I closed per month, or my team, my mortgage team, and I told him, and he goes, well, that's no fair. You have help. I went, dude, what do you? No, that's what smart people do. Of course, I have help. Just
Exactly.
like just like Amazon, just like Apple, just like Henry Ford.
Yeah.
It's leveraging other people, and frankly, other people leverage you and me, right?
Absolutely,
So
absolutely. And so tying back into the idea of, my background is in journalism and whatnot, I actually find these phone calls really enjoyable. And uh, some of these people I've been calling or talking to lately, I haven't talked to them in 2 or 3 or 4 years. I mean, I'm bad at it. I'm my own worst enemy, right? I wouldn't hire me as an employee, but that's why I'm self-employed.
yeah,
Anyways, the point is, I have the call and it's like a snapshot in time of other people's lives, and you see how things are progressing. And oh,
mm,
there's a baby, and oh, there's a promotion, and oh, yeah,
mm,
that's great, right? So that's actually the really enjoyable part of it, and it's almost like some of the calls almost feel like reconnecting with an old friend. Some of
yeah,
them feel awkward, sure, right? But
yeah,
that's because I've been bad. I haven't been
yeah,
doing my job as a regular annual mortgage reviewer.
yeah. Good for you, man.
Yeah,
Well, Jason, I can tell you, your success couldn't happen to a nicer guy. And congratulations on your numbers. And yeah, it's just flicking a little guy off your shoulder and just doing what it needs to take, and outsourcing when necessary. A lot of lessons in here. The outsourcing, the marketing to our database, the
yep,
octopus method.
yep.
Because you get loans from SEO stuff too.
Yeah, so I've been on Chris Johnstone's SEO program for probably a decade now. That's had a tremendous impact in terms of generating new business. Um, Google threw me for a loop last year and I got knocked down. My listing name got changed and that hurts your SEO. But we're working on climbing the ranks again. And the reality is, I'm so busy right now. It's probably okay that I'm ranking where I am. Yeah, I mean, the name of the game is to get as many at bats as possible. And, you know, you'll
Yeah.
you'll hit the occasional base hit and every once in a while a home run too. So
And you know what? Yeah, there's another message I'm hearing kind of consistent with all this too, is write small checks to cash big checks.
for sure,
Write small checks,
for sure.
cash big checks.
Yeah,
The good news is our definition of small and big changes upwardly. Where in your case, maybe writing a check for a couple grand a month ends up being a small check to cash the yet even bigger check.
yeah,
And so good for you,
yeah.
Jason. Good stuff,
Well,
man.
and the hope is there are even bigger checks coming, right? Like
And
from my perspective, this is early days into doing the database stuff. And I know like if someone signs up to do the CRM and they're going to have every intention of doing it themselves, you're fooling yourself. It took me like 4 months just to get a CSV file over, right? So spend the money, just get it done for you and call it a day. Go do
yeah,
mortgages, not databases, you know?
yeah. Anyway, hey man, Jason, is there anything I should ask you about today that I didn't?
Um, hmm. No, I mean, again, our market is different than yours in terms of how the sales cycle works, right? So, my understanding of the US market is someone gets a mortgage for 30 years kind of thing. And if rates drop, you have to pay to, well, you would pay to break the mortgage, etc. Same idea happens here, but on a much shorter period of time. So we can get 2 or 3 or 4 transactions in the same sort of life cycle as,
So I would say we're about the
yes.
same in that, Jason. That
Okay,
yeah, I would say that the vast majority of my clients, I don't know the exact number, but it's a vast amount. Almost all of them, almost nobody pays off a 30-year mortgage. That I'll refinance somebody three, four, five times.
okay,
That they pulling equity out, paying something off, pulling equity out, buying a house, rates drop, getting a lower rate,
okay,
doing debt consolidation, even if the rate's higher, because it makes sense that it lowers their total payment. So, no,
yeah.
I think it's very, very, very
Think it's
similar.
comparable? Okay,
Yeah, I think it's comparable. I don't know what my average. That's actually a good question, I'll find that out here in the next 2 hours. I'll have that answer.
okay,
But if I had to grab a number, I looked at it years ago, and it seems like it was my average was like just a little over 5 years, like 5.5, 5.6, or something like that. But I'm saying that's just strictly off the top of my head. But it seems like it
right,
was somewhere around that neighborhood, and
okay,
that they either sell, move, or cause we work our database, very, very like you, we work it very thoroughly, because we understand that the mortgage is a tool to solve a lot of life's situations,
yeah,
and to use it as a financial tool, is just a smart way to do things. So good stuff, Jason. Hey man, thanks for coming on the podcast, and sharing what you're doing, man. It's working, and congratulations to you, brother.
yeah, thank you.
All right. Hey, for our listeners, thanks so much for tuning in. If you want to go look at the tool that we spoke about with Jason, you can go to loanofficercrm.ai, loanofficercrm.ai. And the biggest thing I would say I got out of this is do something, right? Take some action. And boy, talking to your database, it's never a bad thing. And when one or two or three or even a dozen people say, hey, don't do that, uh, take them off the list and keep acting to all the others. Don't penalize the majority because of a small minority.
Yeah,
So good stuff. Thanks again, Jason.
okay, thanks, Carl.